All right, man. Eugene, thanks
What's
for
up?
showing up on my podcast, brother. The Wealth and Wellness Report. Welcome.
Thank you for having me.
How you doing?
Doing great, man.
Good.
Doing great.
For the audience, I'd love for them to learn a little bit about who you are and where you come from.
Yeah, man. How far back you want me to go? I could tell.
Give us the origin story, man. Yeah.
Let's do it. Gosh, I grew up here in the Bay, born and raised. The 90s were a great time to be alive.
For sure.
Great time. But of course, the original plan growing up in the 90s and being a Chicago Bulls fan and being a basketball player, of course, the original plan was to play in the NBA, right? We all had that dream. But I don't know if your viewers can tell from these cameras, I'm 5'7", so plan A didn't exactly work out the way I thought it would. But I still had big goals, man. I still had big goals, growing up watching MTV Cribs, right? You watch these celebrities and how they live. And I remember an episode with Penny Hardaway, and he had a bowling alley in his house. You got a bowling alley in his house, by the way? Because I feel like this is a nice house. You might have a bowling alley somewhere.
But
I haven't seen the whole thing yet.
That'd be dope.
So I said, okay, one day I want to play in the NBA and have a bowling alley in my house, just like Penny Hardaway. Well, again, that didn't work out. So I had to figure something else out. And I think oftentimes in life we have these big dreams, but the world kind of beats us up a little bit. And we kind of put those dreams up in the shelf, in our closet and say, maybe one day I'll get back to that. So by the time I became an early adult, that dream had kind of been beaten. I've heard no enough times in my life that's not possible, where I kind of started to believe it. And I was doing the thing everyone else, was doing in life, what we were told to do. And I was trying to go to school and get good grades and get a good job. But my problem with that, Diego, was school I never liked school. Maybe you can relate, or your audience.
Oh,
can
yeah,
relate.
100%. I went to the University of Life and majored in direct experience and got out of the university and the school system.
Yeah.
Completely not my jam.
Yeah, it was not my jam. There was parts I did like. I like the social aspect. I like, talking to girls and whatnot. But right around the age of 22 years old, I was like, okay, I got to figure something out, because, I'm 22 now. This is where I'm supposed to be finishing college, and things weren't, again, going to plan. So that's when a buddy of mine introduced me to my first business opportunity. And I had never thought of myself as an entrepreneur. I thought entrepreneurship was cool for those who were good at it, but growing up in my household, sales was a bad word. So I'd never thought I was a salesperson, or didn't think very highly of salespeople, to be honest. So when a buddy of mine introduced me to network marketing, and he said, hey, man, come with me to this event. There's a speaker. He's going to talk about building your own business from home and financial freedom and all these concepts. I'm like, oh, yeah, I've heard of those things. Not for me. Thanks, but no thanks. And this went on for months. My buddy and I, we worked together, so I couldn't escape him. So he kept saying, bro, just come with me to this event, man. Come on, just see what I'm seeing here. This is awesome. And he started making some money. He was like, dude, I just made 10 grand. And I'm like, okay, you're an idiot. And you made 10 grand? Okay, let me go see what this is all about. Shout out to Sam. You're not an idiot. You're a smart guy. So anyway, I finally go to this event, Diego. And for the first time in my life, I actually feel a bit inspired. I see a guy speaking. He's also 22 years old, and he seems to have things figured out. And that completely changed my life. I fell in love with personal development. I learned the skill sets of sales and leadership, and found a mentor for the first time, and followed a simple system to success. And over that next few years, I actually ended up building one of the largest organizations in the company. And the top level at that company was called executive director. And I became the youngest one in the company at 25 years old.
Wow.
So things definitely turned around.
What kind of business was it?
It was called Legal Shield. We were marketing legal services.
Yeah.
Still have that business today, still rep the product. One of the things I learned in that chapter of life was sales is easy if you believe in what you're doing. Because now you're just telling people what's working for you. And it's a transference of belief. And so, yeah, I still rep the product today because I still believe in it. But did that for a few years. And then being here in Silicon Valley, of course, we're in the tech world. So a buddy of mine started a tech company, and he calls me one day and says, hey, do you want to help me get this company off the ground? I said, sure, what the heck? I'm kind of like Forrest Gump. I kind of just put one foot in front of the other, and things kind of just
classic
appear in my
entrepreneur.
path.
Classic entrepreneur.
Exactly. None of this is planned. This is all God's plan. I have nothing to do with this. But I'm smart enough to walk through the doors at times, right? So I said yes to that journey. And that's where I was for the next 6 or 7 years, which was great. It was a job. And I came from not having a job, being an entrepreneur. It's kind of like if you move out of your parents' house and then you move back in, you're like, okay, I got to move out again at some point, right? I got used to that freedom. As you can see, my shirt says freedom. It's a big thing. It's a big deal to me, right? So I did that for a handful of years, got some great experience there. But then I was like, okay, I think I'm ready to go back to do something more independent. Well, right around that time, and don't worry, we're almost to present day now. So right around that time, I had also started dabbling in the solar industry. Okay. So I'm in tech, but I also start dabbling in solar. A friend of mine starts a solar company. He says to me, hey man, I'm looking for people to partner with. I'm building out this affiliate program. I'm looking for insurance agents to partner with and real estate professionals as well. And network marketing taught me that you never have to be the solution. You don't have to be the product or service, if you will. You can be just the connector, the broker. So I say to my buddy who's running the solar company, I say, well, hey, I have an interest in solar. I'm not an insurance agent or real estate professional, but I know a ton of them. Can I broker some connections here and override all the production? Can I turn this into my own little network marketing comp plan? He said, sure. So I made a list of all the insurance and real estate professionals I know. And that's a tip for anyone in any sort of business. When you get started, make a list of everybody you know, your contact list. And one of the people I reached out to was a man named Jeff Delgado. And I connected him with my buddy running the solar company because Jeff was in insurance. And they actually struck a deal. And I helped broker that deal. So now I'm overriding solar. But again, Diego, this was happening right around the time where I was starting to be disenfranchised, if you will, with my day job. I was like, I'm looking for something else to do.
Yeah. What? Give us a timestamp. What year was
this? This is back in 2000. Gosh, that's a great question. When was this? This is 2022? About 5 years ago? Yeah, about 2022. So because of the connection I made with Jeff and Alex, that brought Jeff back into my world, right? Jeff and I are talking about this deal, and he goes, so Eugene, besides this solar stuff, how's everything else going? And I'm like, well, you know, the tech company's doing well. And Jeff actually knew about the tech company because he had helped us at one point do some sales for the company. We had hired him as like a sales consultant. And he's like, I see the company's doing well. I'm like, yeah, it's doing well. But to be honest, bro, I'm ready to get out of here and find something else. Also, another side plot there at the time, I had just got engaged to my fiance.
Wow.
And so I'm like, okay, I'm starting to think for the future. I'm like, this job is good, but it's not going to give me what I want to be able to give my family. Right?
Yeah.
So he's like, well, bro, you have that experience in Legal Shield, and Legal Shield is basically legal insurance. Like, have you ever thought of getting into insurance? And this is how I knew it was God's plan, bro. I say to Jeff, hey, you know what, dude? I think I have a life insurance license. And he goes, what? Why? Okay, so let me back up a couple years, Diego. So while I was building that tech company, I was living in Southern California. I had moved down there to help expand the company into SoCal. And my roommate was a podcaster. He had a podcast, shout out to the Parables and shout out to my boy EJ. He was a podcaster, so he had interesting people coming in and out of the house all the time. Well, one of them was Ed Milet's business partner, if you know who Ed Milet is. He's like one of the OGs of the life insurance game, huge social media influencer, podcaster, yada, yada, yada. So one day EJ comes home and I asked him, you know, how was your day? And he goes, oh, I just got home from a meeting with Ed Milet. I'm like, wait, you were just with Ed Milet? Yeah, I was like, yeah, I was at his house. I was like, wait, you were at Ed Milet? What the heck were you doing at Ed Milet's house? He's like, well, you remember Ed when I interviewed last week? Yeah, well, him and Ed went into business together, into the insurance world and blah, blah, blah.
Yeah.
And I'm like, okay, I didn't hear any of that. All I heard is you were with Ed Milet. What do I got to do to go hang out with Ed Milet at his house?
Right.
He says, get an insurance license and you can hang out with us. I was like, cool.
Done.
Yeah. So a week later, I have my insurance license. I meet Ed Milet a couple times. I'm like, oh my God, this is awesome. And then I put the insurance license to the side. Don't even think about it. Okay.
Interesting.
So when Jeff and I meet and he goes, why don't you think about doing life insurance with me, bro? I think you'd kill it. I go, I think I have a license. He goes, really? Let me have my assistant look into that.
Yeah.
Diego, my license was 4 days away from expiring.
Wow.
I'm like, okay, this is meant to be.
Wow.
So right there, I made the decision with Jeff. We were at Isla Restaurant in San Bruno. Great Filipino food. Y'all should check it out. And I said, okay, this is meant to be. Let's get started. And that's where my part-time journey with insurance began. In that next 90 days, I made about 50 grand on the side for my day job. Wow. And I was like, okay, this is real.
Yeah.
And I still stayed part-time for about a year. And then we finally started Bisto Biz in 2024. And that's when I went all in full-time. And it's been a roller coaster for 2 years. And now I'm hanging out with Diego, man. So here we are.
You know, most people run from the word insurance. You obviously ran toward it.
Yeah.
Like, tell us a little bit about what drew you into the space. And
sure.
Also for the viewers, like, you know, life insurance is not a lot of people fully understand life insurance. So
Yeah.
maybe you can kind of break that down too.
Yeah, absolutely. And I think those two questions kind of go hand in hand. I think I ran away from it for the longest time because I just didn't get it. You know, when I was first exposed to this concept of cash value life insurance, I was like 18 years old, dude. Like, I didn't understand anything about finances at that point.
Yeah.
I just knew like I was trying to make money, but I didn't understand the deeper wealth strategies, tax strategies, and all that. So I think what happened was just timing. You know, I happened to find this industry right about the time I was in my early 30s. And I think in your early 30s, you start looking at life a little bit different. You're maybe having your kids, you know, at that age. You're buying your first home. You're starting to think like, dude, I'm not 20 anymore. Like, I have to plan for the future. So you kind of turn from like a boy into a man. And so everything just kind of came together at the same time, where I learned in that season that there's so much more to life insurance than just if I die, my family gets money. You know, there's the whole living benefits aspect where your insurance can pay you out if your health ever takes a dive. I mean, that's a big deal. Like, the leading cause of bankruptcy in America is medical debt. People are just one or two, or an accident or a diagnosis away from losing their entire way of life. And, you know, just ask yourself, if you can't work for the next 3 months because you're in the hospital, how would that affect your finances?
Yeah.
For most people, that'd be devastating. And then on the cash value side, I didn't realize that life insurance can be used as a wealth strategy where you can grow and compound your money. Because, I mean, hopefully one day we all want to retire. And the only way that's going to happen is if we're smart with managing our money. Insurance is a great vehicle for that. You can compound your money, but if you do it in like the strategy I specialize in, Index Universal Life, you're compounding your money, but at the same time, you're protected from losing it. You're not going to pay tax on it, and you can access it as capital for your, you know, investments with Diego.
Yeah. Yeah.
Apparently, he's got some great spots in Cabo you should check out. Like,
Dude, we're going to get into it, but before we do, you know, Biz to Biz, you know, that name says it all, obviously. And that's kind of where you guys lay your hat, right? So what's the actual mission behind Biz to Biz, and tell us a little bit about, you know, that organization and what that means to be like a sole agent working with a team and a collective, and break that down for us.
Sure, absolutely. So there's many ways you can get into the life insurance game for like those who are interested in doing it. You know, you could be a captive agent. You can go join what's called an IMO, an agency basically. And so Jeff and I were kind of running our own little agency up here in the Bay Area. But where things got really interesting was we got a phone call one day, or Jeff did, from a former business partner of his. And his former business partner had just finished selling an IMO. So at the highest levels of our company, you can actually get acquired, just like you can, you know, in the tech world. We were building a tech startup hoping to get acquired one day. Well, that can also happen in the insurance game. So Jeff's partner, now partner, had just finished selling his IMO for $200 million.
And for those who don't know what an IMO is, what does an IMO stand for?
Insurance marketing organization, basically just an insurance agency,
cool.
Right? The sales team that brokers these carriers' products. Okay, just like if you're brokering real estate, you know, you're brokering insurance through an IMO, insurance marketing organization. Yeah, he had just finished selling a company, but what he had done uniquely, Diego, that I had never seen before. Two things. Number one, when he sold the company, he actually shared a lot of the proceeds with his field. You know, you and I both know acquisitions happen all the time, but typically when that happens, like the owner gets rich, a couple of the investors, but you know, the day-to-day people, they don't really see anything from that, right? Well, Les, by comparison, was very generous. Out of that $200 million, he gave $25 million of it back to the field. So a lot of people, 150 people got paid out when he sold the company. So that was great. You know, I'm not going to name any other IMOs, but there were other IMOs out there that sold for a lot more money, and one or two people got rich, and that was about it. The second thing he did differently, and why we started Biz to Biz, is because he made a deal with the company that bought him that he could build a brand new IMO and they would buy it again. So he pre-negotiated his next company acquisition. I had never seen that before. It would be like starting a tech startup on day one and Microsoft's already saying, yeah, we'll buy you in 5 years. Just build it, we'll buy it. Like, that doesn't happen.
Yeah.
So we're giving agents the opportunity to participate in that upside again when we sell the company. So the mission of Biz to Biz, of course, on the product side, is to help educate and empower families with access to some of these financial strategies, because middle America doesn't get the help that they need and deserve. You know, if you're an affluent person, you have all the advisors in the world beating down your door to try to manage your money. But what about the working class mom and dad raising some kids, trying to make sure they have money to go to college and they have a comfortable retirement? Like, no one's talking to them. Financial education, there's a huge gap in that in society.
Huge gap, man.
Huge gap.
Yeah.
So that's our mission, is to empower people with the strategies they should have been taught in school but weren't, and then give everyday people a shot at being a part of something much bigger than, I hate to say it, your job is probably offering you.
Yeah. And a big reason why I was so drawn to your business, Eugene, is because you do work with those smaller business owners. You do work with the middle class. You are empowering them and educating them on all of these amazing strategies that you don't learn in school. You don't learn at university unless you luck out and or you're yearning to find it. It's really, really rare. So what's one of the biggest misconceptions people have about what you do for a living?
That's a great question. I'd say the biggest misconception, again, is life insurance is just there to pay my beneficiaries when I die, right? Like the whole what's in it for me aspect is totally missing.
Yeah.
So educating people on that, I think, is probably the biggest thing. It's eye-opening to people. Like, wait, like I didn't understand life insurance could be used as a wealth creation vehicle in my lifetime. I didn't realize that I can borrow against the cash value here and use it as capital in the same way that, Walt Disney funded Disney World or Disneyland with his life insurance.
It's an amazing story.
Yeah.
A lot of people don't know about that.
They don't.
And a lot of people don't know about how the power of life insurance and its living benefits.
Correct.
To tell us about how we can utilize that tool in our day-to-day.
Sure. So like, I'll tell you how I use it, for example. Okay. Let me give you a perfect example here. So I'm not some billionaire tech CEO that can borrow against the equity of his company, right? That's how Elon Musk gets paid. Okay. He doesn't take a salary. He borrows against the equity of SpaceX or Tesla, right? If you're a homeowner, you can borrow against the equity of your home, but not everyone's a homeowner, right? And there's, stipulations around that. But most people can qualify for cash value life insurance and use that as a nest egg to leverage. Okay. So I'll give you an example. It was about 2 years ago and I wanted to buy some physical gold. Okay. And gold's had a great run for the last couple of years. So
sure has.
Happy I did that. Okay.
Yeah.
Wanted to buy some physical gold. But because I understand how the IUL, this particular kind of cash value life insurance that I market works, I funnel my capital through my IUL. And I'll tell you why I do it. Okay. So I took the $10,000 that I was going to use to buy the gold. I first put it into my IUL and then I loaned it right back to myself. And then I bought the gold. Why did I do it that way? Because when you put the money into your IUL account and then use it, it still compounds inside of the account. So now I'm capturing the interest on $10,000 in my IUL, but I'm also able to access the capital to buy the gold. My money is growing twice with the same dollar, okay? Because think about what happens when you borrow money from a lender or a bank, okay? They're charging you interest on that money. When you borrow the money from yourself, when you be your own bank, you make the interest on the money and you have the capital. Now, I'll put some quick numbers to that. Let's say the interest rate on the loan you pull out is, I think right now it's 5%, okay? 5%. But the cash value account in your IUL, we've averaged a 10% return now for the last 20 years, okay? So that positive arbitrage there, let's say you have $100,000 in your IUL and you borrow 10,000 of it, okay? You're paying 5% on a $10,000 loan, but you're gaining 10% interest on $100,000. So the IUL is essentially self-regenerating on its own. All you're doing is making your monthly contributions to it. The IUL is self-regenerating, and it's all secured against the insurance. So if you borrow $10,000 and then a week later you get hit by a bus, that $10,000 just gets deducted from your life insurance amount that gets paid out to your beneficiaries. So I'm always funneling my money through my IUL because I'm capturing that interest basis before I go out there and go out there and deploy my dollars into something else.
Amazing. So I'm totally tracking you, but for the novice or the individual that's never been in this space, let's backtrack a little bit.
Sure.
There's life insurance, but there's all sorts of different types of life insurance policies that someone can purchase.
Yeah.
And these contracts are really relative to how the life insurance agent designs them.
Correct.
For the individual.
Correct.
And, the premiums on these policies are also dependent on their health rating and their health score. So a lot of them, you have to go in and get labs done. You got to make sure that you're not on your deathbed, essentially, right? Tell us a little bit about the different types of policies, because you said IUL, and then kind of break down each one if you can, because we'd like to kind of circle back to why some of these early cash value policies are so powerful.
Sure, absolutely. So I'll keep it pretty surface level here. But basically, there's two types of life insurance. You got temporary and permanent. Temporary insurance is more commonly known as term insurance. That's insurance that's with you for a predefined length of time, usually 10, 20, or 30 years. This is also the insurance that you have through your job. And that's a form of temporary insurance, right? So that insurance is pretty straightforward. If you die within that time frame, it pays out to your beneficiary. That's that, okay? But unfortunately, about 95% of the time, those policies do not pay out because you outlive the term or you just stop making the payment at some point, okay? Insurance companies know that. That's why it's so inexpensive. Now, term is great to have, let's say, if you're
protection, right?
Protection.
Yeah.
You're raising a young family, and if you're buying a home and you want to protect the mortgage for, say, 30 years, those are the two most common use cases for term. And term's great for that, okay? If you just want protection when your need for insurance is the highest, okay? On the cash value side, you got a couple options there. You got the IUL that I tend to market, and then you also have whole life, okay? So they each have their pros and cons. If someone says to you like, oh, one of these is the devil, it's because they sell the other thing, okay?
Right.
So just
run.
Yeah. I'm not saying run, but just take their opinion with a grain of salt. I market both, so I kind of have an agnostic view towards both. If you're asking me where I put my money, it's the IUL because the IUL tends to have better long-term growth. Okay, the advantage to whole life is you're a little bit more. It's a lot more fixed on how it works, and depending on how you design it, because you're asking about design, if you properly design a whole life contract, you can actually have higher liquidity than in an IUL sooner. So if immediate liquidity is more important to you, a whole life's a better way to go. If long-term returns is better for you, the IUL is the way to go. But what they have in common is, aside from having insurance, you're also having this cash account grow, okay? Now, to properly design these products, you want to make sure that, especially if you're trying to optimize for cash value, you just want to make sure that the agent is designing the product where the insurance is being minimized and the cash value is being maximized. So for every dollar I put in, instead of half of it going to insurance and half of it going to the cash value, you might want more of a ratio of 20% is going to insurance and 80% is going to cash value within the limits of what's allowed. So that's pretty much how they work.
Whole life, I've got like 7 or 8 different policies, and they run from term to whole life to IULs. Which what does an IUL stand for?
Indexed Universal Life.
Okay, and an Indexed Universal Life insurance policy is when the life insurance company takes that general fund and deploys it into the markets. Correct. The S&P 500, the NASDAQ, correct, and whatever other
investment
vehicle
funds.
Or market that they investment funds.
Yep.
Correct. Why would somebody want to pick one or the other and or both? Like, what are some of the strategies that you would employ? And because a lot of these policies, it's an arrow in the quiver, right?
Yeah.
So like, depending on the strategy, depending on the individual, depending on the health rating, depending on where they're at, you might want to pull one or two of the quivers, or however way you want to structure it. But maybe give us an example of a situation where somebody would want to have like a combination of the 2 or 3, or maybe like a real life kind of scenario. I think would be helpful.
There's so many ways this can go depending on who the person is. To your point, there's a lot of variables. But again, the whole life is if you value predictability, like what you're going to get, what's going to be in this account in 10, 20, 30 years. Okay. That's where the whole life really shines, because what you're getting. Okay. And then again, the more immediate liquidity, like let's say you have a lump sum of money you want to deploy, right? You have $100,000 and you want to use it right away. Well, the whole life might be the better fit for that. Okay. Whereas with the IUL, if you drop in that same lump sum of $100,000, you might have access to half of it immediately.
Yeah.
Okay. So liquidity is one thing you want to think about. Risk and return.
Yeah.
That's what you want to think about. The IUL can have much higher returns because, to your point, and I should have explained this, your growth in an IUL tracks whatever index you allocate towards. It could be the S&P. We have a few different money manager indexes like Morgan Stanley, BlackRock, Barclays. We even have a proprietary gold index. It's the only gold index in the industry. So there are years where these indexes do amazing, right? And actually, a few of our indexes, which is another unique thing, are not capped. You can actually get the same return of the index. Typically, a fund in an IUL is capped. Like our S&P fund is capped at 12%. Meaning if the S&P 500 does 30% that year, you're capturing 12 of it. Okay.
And then there's a floor there too.
And there's a floor of 0, quarter of a percent. So there's a range there. Whereas with a whole life policy, you're getting a guaranteed rate of, call it 4%. Okay. 4 to 5%. If it's what's called a participating whole life company, they pay out an annual dividend. So maybe that tax on another point or two, but you're ranging anywhere from like 4 to 6%, but it's pretty predictable. The IUL, there's a bit more variability. Okay. So if you're okay with that little bit more risk, okay, like sure, could there be a doomsday scenario where the accounts are negative for the next 10 years, so you're only getting 0.25% for the next 10 years? Yeah, that could, I guess, theoretically happen.
It's never happened.
It's never happened.
50 or 60 years, right?
And our look back average is pretty good. So that's what, like, the whole life people who hate IULs will say, well, what if the market does that? It's like, well, yeah. But
you're banking against the American economy.
Yeah, exactly. So
at that point. The three big financial enemies we call out: inflation, taxes, and market risk. I know we just talked about market risk. Mm-hmm. How does a well-structured policy kind of neutralize all three at once?
Sure. So, I mean, the remedy to inflation is you have to have your money deployed, and it has to be compounding.
Yeah.
Okay.
Into assets.
Into assets.
Yeah.
Yes, absolutely. And of course, there's a million different kinds of assets, but I think the S&P 500 is generally a pretty good place to have your money long term, right? Dollar cost averaging into that. That's what Warren Buffett says he would do if he wasn't Warren Buffett. I'd put my money into the S&P 500, bet on America, and let it do its thing over time, and let compound interest do the heavy lifting. That's how you remedy inflation theoretically is compound your money. In the
Which is the sixth wonder of the world, compounded interest.
That's it. And then when it comes to risk, well, yeah, you have to account for that too. Like, if a 2008 happens where people lost half of their retirement accounts that year, what you have to remember with losses is they disproportionately impact your money. Okay. If you lose 47% in a given year, like they did in 2008, you actually had to gain 70% in 2009 just to get back to where you were.
Yeah.
And some analysts say there are people still recovering from 2008. They haven't fully recaptured their gains. And it's tricky. And see, the cool thing with an IUL is you don't lose any money if the economy is negative. Okay. You have that floor of 0% we talked about. Okay. So when I tell someone we've averaged 10% for the last 20 years, that is a true average, because averages can be misleading. If you sit down with an advisor, okay, this is a crazy thing. You sit down with an advisor and you say, hey, what's your average been over the last 100 years? He can say 0%. If for the last 100 years, he lost 10% and then gained 10% and then lost 10% and then gained 10%. If that went on for 100 years, technically he can say he averages 0% return over the last 100 years. But if you do the math on that, if you started off with $100,000 and then went up and down 10% for 100 years, you'd be down to like $60,000 because the losses, the velocity drag, hits you more than the gains help you. That's why Warren Buffett's first rule of investing: don't lose money.
Yeah,
because of that.
Yeah.
So in an IUL, it's baked into the cake that you're not going to lose any money. Okay, so that's how you mitigate the risk. And then the taxes, we just talked about that, because technically what you're doing is taking a loan against the fund, the asset. Loans aren't taxed, so you're accessing the money tax-free. So boom, that's how you do it.
It's a cheat code, ultimately, And for me, the gold is in how you deploy that liquidity.
Correct.
Because if you're taking the money out of let's just use the IUL example, it's still compounding like the money never left. But the money that you deploy, if you buy an asset that also compounds, you're just stacking more compounded interest into your play.
Yes.
What I think a lot of people don't know either is when you deploy that capital, you don't necessarily have to pay it back within a particular time frame, correct?
Nope.
Maybe you could talk a little bit about how you make the policy whole again, and maybe some strategies on how to best do that.
Well, kind of like that example I gave earlier, that you're still gaining interest on the account, okay, while you're paying down this loan. So that internal positive arbitrage is what's paying off the loan, okay? And then, of course, you can accelerate the payments if you'd like to. But from the client end, as the insured, nothing feels different. It's not like if you buy a car, okay, and you're having to now service this car note. You're just putting in the same couple $100, $500, $1,000 a month that you were doing, and your policy is self-replenishing internally. And then if you just never pay anything, right? Well, theoretically, your policy could implode because you do owe money on the loan, and if you're not putting the interest towards the loan, then that can eat up your policy. typically that's not how it works. Typically your policy is self-regenerating. And again, it's secured against the insurance. So if eventually you pass away with an outstanding loan balance, it's just deducted from the amount that pays out to your beneficiary.
Yeah. And that acceleration of making the policy whole again would be determinant on the asset that you purchase and the money that you receive from that asset.
Yeah.
Like real estate, for instance.
Yeah.
It's like if you go buy a 10-unit building and you get rents and you get cash flow on your net operating income, that cash flow can then go back into your policy.
Correct.
Make the policy whole again. And then when it's whole again, then you can go deploy that into that next 10-unit or 15-unit building.
Correct.
Cool part about that is you still have that 10-unit building that you originally purchased. That's still generating income and appreciating. And so it's like this, it's the snowball.
Yep.
You start the snowball at the top of the mountain, it's very little. And by the time you get down to the bottom of the mountain, the thing is like an avalanche.
That's right.
What does a truly protected family's financial foundation ultimately look like, Eugene? And if someone starts from zero, what's the order of operations?
We use a method in insurance called DIME to talk about coverage, right? DIME, or an acronym. D stands for debts or death. Like you want to make sure that in the event of your passing, your debts are taken care of, your funeral arrangements are taken care of. Okay, so that's the D in DIME. I stands for income replacement. Okay, if you're the breadwinner of a home and you're bringing in, a couple $100,000 a year, well, how long do you want your family to have your income when you pass? Okay, you want your family to have 5 years of income. Well, then that's $1 million right there that you have to tack on to the protection amount. Okay, M stands for mortgage. Do you want any money specifically to pay off the home? So factor that into the equation. And then E stands for education, or for me, since school's not really my thing, like entrepreneurial fund. Do you want your kids' education paid for? Do you want them to have some seed capital for their business venture? So that's a nice, kind of a rule of thumb formula to determine how much a family needs to be fully protected.
That's great. Great acronym. Yeah.
And, there's different rules of thumbs, but that's the one I've kind of stuck with over the years. There was a second part to that question. What was that? That was, if someone's starting from square one.
Correct.
Some people start at square one and they're in their 50s. They're back to square one.
Yeah.
Okay.
Yeah.
Well, if that's you and you're saying, hey, I want to retire with $1 million, I mean, what you're going to have to do is go make some damn money. Right. So, yeah, we can talk about deploying capital, but you need to have more just income to deploy.
Yeah.
Okay.
Yeah.
You can't squeeze blood out of a rock here. So, hey, be an insurance agent with me or go do some deals with Diego and, stack your working capital. Okay. If score one for you is you're a young person, literally do anything but blow your money. Okay. Because you have compound interest on your side.
Yeah.
So even if you're only putting away $50, $100 a month, just start, because zero doesn't multiply, but anything above zero multiplies. Okay?
Sure.
So my advice to anyone who's at square one is just start. That's the hardest part, is getting into the routine. We're so conditioned as a society to spend our money and give our money to DoorDash and order things on Amazon. And when I was 21 years old, I, went to Vegas and we're buying drinks, right? And because of that lack of financial education, that's what I thought you did when you made a little bit of money. I'm like, oh, the big timers put rims on their cars, so I guess I'm supposed to get a nice car and put some rims on it. Turns out, Diego, that's not how you build wealth. Who would have thought? Okay. Yeah, it depends on where you're at. But I mean, some things that I think you can't go wrong with no matter where you are is diversifying your income. Okay. Don't just rely on a job to make you money, but build something on the side that can eventually free you from a job. Okay. Both financially and your time. I think that's a great place to start. And let compound interest do its thing as soon as you possibly can.
Yeah.
Okay. You want to think about in terms of optimization too. Understand the tax game and tax implications. Another reason I'm a huge proponent of starting your own business is because you have access to write-offs for the first time for a lot of people. Like if you get an insurance license, you can now deduct a lot of things. I'm not a tax professional, but you can deduct a lot of things. Okay. And having been self-employed now since I was 22 years old, my mom's a tax professional and she's helped me play this tax game a lot smarter. Taxes are the largest expense we pay in our lifetimes. The average person pays $700,000 in their lifetime in taxes. If there's a way to make that expense column a lot smaller, why would you not investigate that?
Yeah, there's only two things that are certain in life, right?
Death and taxes.
And taxes.
Yeah.
Yeah.
And government's blowing our money.
It's a whole nother conversation, but
yeah, tune into our next podcast.
That the government does incentivize investors and those who purchase real estate and those who kickoff enterprise,
Yeah.
hold more of their money, deploy more of that capital into the community, into the roads, into the buildings, into the infrastructure, into the built environment.
Create jobs.
Yeah. And jobs. So I think a lot about, these, like the Ed Milet's, the Jeff Bezos, the Elon Musks, the guys that are making a lot of money, the amount of taxes that they pay in employment tax, their payroll taxes, their property taxes, it's not something a lot of people really understand. And it's because they're not entrepreneurs and they're not literally having to pay those taxes.
Yeah.
They might have a property tax bill. They might have, a sales tax bill. They might have a state tax or some federal tax.
Yeah.
But the amount of taxes that an entrepreneur has to pay is by far a lot more than what an average W-2 employee would pay.
Yeah.
That's when the fun starts, because the incentivizing of government giving us or allowing us to take deductions, allowing us to depreciate our assets, and ultimately bring down those liabilities is, like you said earlier, it's just not taught in school. This isn't something that they, there isn't a class that you can take in high school that's going to really equip you and empower you to learn and grow and build. I've been a real estate investor for a while now, and I've got entities and holding companies and more of like a complex structure with multiple income streams. How does insurance fit into a structure like that beyond just covering my life?
That's the big thing, of course, is covering your life. And, for business professionals like yourself, there are more advanced strategies like key man policies, for example, right? You got a top salesperson in your company or a top executive in your company and they passed away. Well, there's going to be a time needed to replace them and a cost to that. So a key man policy ensures that if someone dies and you guys need to replace them, you got access to the capital to do that. You have buy-sell agreements, okay? So if you're you own a business and you have partners and your partner passes away and there's no buy-sell agreement, well, their shares can then go to their son or spouse who has no interest in running the business, but you're legally obligated to run the business with them. So a buy-sell agreement is part legal agreement and part insurance policy, where the insurance policy will buy out the shares of the son, and now you can absorb that ownership of the company. Life insurance could be used in those like specific instances of, running multiple enterprises. And then, hey, if you're a successful person, like you need to deploy your funds to financial resources just like anyone else does, right?
Yeah.
So I don't care if you're just getting started or if you're doing very well in life like Diego, like you got to put your money somewhere. So for my own money, I mean, why not an IUL, and then use that same strategy to fund whatever else you want to fund, your real estate investments or whatnot.
A lot of our viewers are either upcoming investors or they're investing already. They already have businesses or they want to start a business. The podcast is really central to building wealth and building wellness along the way. And business owners within construction and real estate are usually exposed to liability, and most employees aren't in the grand scheme of things. What are the blind spots you see most often when you sit down with entrepreneurs and you're breaking down these strategies?
Look, at the end of the day, what are companies? Companies are entities comprised of a bunch of people. It all comes back to, what do people need? They need to protect themselves from if they die. They need to protect their income if they get sick. They need to grow their money for the future. So whether you're implementing these life insurance strategies with a person or a group of people, it's all kind of the same fundamentals. It's just the mechanism for deploying it might be different. Like, for example, one of the strategies that we specialize in is we can help business owners, and this is super cool, okay? We can help business owners give free IULs to their employees. How cool is that?
That's very cool.
It's called the Section 125 plan. I know enough about it to be dangerous, okay? We have a whole division of experts in this, but the short version of it is the IUL is paid for by tax savings. So if you're an employee, you can get an IUL that, let's call it, averages about a $200 a month IUL. You get the same take-home pay, but that IUL is paid for by some tax savings, okay? The reason the employer would want this for their employee is because when their employee saves on taxes, the employer saves on payroll taxes.
100%.
So they're saving an average of $500 per employee a year on payroll taxes. So if you have 100 employees and you're saving $500 per employee a year on payroll taxes, you're saving $50,000 a year on payroll taxes.
So is there like a copay arrangement there? Like,
no.
So the employee deducts whatever amount from the paycheck, correct?
Same take-home pay.
Same take-home pay. Interesting.
Yeah. It's just the structure of it. That's where, you want to talk to our smart people.
Yeah,
How that
because
works.
there's so many layers of this onion of life insurance. Like a lot of people don't know about all these like layers.
It's sick. It's a rabbit hole for sure.
It is, and something that we talk a lot about is legacy and legacy planning. Talk to me about what it actually means to leave something real behind, Eugene. And I know you're focused on this, not just money, but a structure that like survives you.
A legacy is something that I think a lot about. I'm very blessed, bro. We're all blessed. If you're born here in America, you could have been born in North Korea. We're blessed, okay? And coming from like a family, with immigrants, right? My grandma was basically forced to come to America against her will, okay? Like she had a great life in the Philippines. She was happy. She had a boyfriend. Things were cool. And then one day her dad comes to her and says, hey, you're leaving that guy. You're marrying that guy who's 30 years older than you, and you're going to America. My grandma was so depressed when she had to marry my grandpa. Like she was literally at the altar praying to God, like, just strike me down now. I do not want to. And then she comes to America. So I'm her legacy. What she did for my dad, and I get emotional talking about it. Me and my grandma are very close. That's her right there. When you think about people and their whole goal in life is to come here, to have an opportunity. And we have that, okay? That my ancestors' legacies is we wanted to give our next generation a shot. We wanted to give them advantages. So am I going to go backwards on that? Like, come on, bro.
No.
That would be for lack of a technical term, I'd be an asshole if
It'd be disrespect.
It'd be disrespect. So I don't want to disrespect the lineage like that. Like I want to move the ball forward. And a part of that's legacy. It's like, what are my great grandkids going to think about me? I heard that old saying, I think it was like Japanese. They say you die twice. Once when you die and once when your name dies. And the goal is you're not going to be here forever, but you want to build something that does last forever. Okay. What you did while you were here, the impact you left. My wish is that my great grandkids still know my name. Like, dang, your great grandpa was Eugene Tomanpos. Wow, he's the reason we're in this building, right? That to me is legacy. So to leave some money behind to help fuel that legacy, I think is great. Like life insurance guarantees that no matter how much you screw up in life, you can still leave your family with a lot of money. Kevin Hart has a funny story he tells. He was like, when his mom died, both him and his brother were left with $100,000, okay, from the life insurance. And Kevin Hart and his brother look at each other, they're like, dang, mama was rich. Mama wasn't rich. She just had a life insurance policy.
Yeah.
Okay. But you can, as your last act, leave this earth and hook your family up with a bag. I think that sounds way better than a GoFundMe.
Totally.
Way better.
Come on. Totally. I mean, like you said, if you start earlier, the cost of insurance is going to be a lot lower.
Yeah.
Because your risk of death is a lot lower.
Yeah.
For those who are older, though, if someone's already in their 40s and 50s, is it too late to build something meaningful, or is there still a play here?
Insurance might not be your vehicle if you're too late in life, but hey, Colonel Sanders didn't start KFC till he was 63 years old.
Yeah.
Okay.
It's true.
So in the basketball game of life, if you're in your 50s, you still got a lot. You're still, early in the third quarter. Right?
Yeah. And there's a death benefit to these policies. So you're leaving a bag.
Yeah, and you could probably still qualify. It might be a little bit more expensive, but hopefully you've managed your money well up into that point or well enough to where, like, let's be honest here. When I sit down with a lot of people and they say they don't have enough money for life insurance, if I truly audited your finance and showed just how much you spend on the silliest things, I think we could squeeze out a little budget. Do you really need to drink at Starbucks $10 every day? Like, come on, so it's just a matter of priorities. But if you prioritize this stuff, I think there's a plan out there for everyone, for most people, that can fit their budget, their situation.
So you built Bisto Biz partly as a recruiting and training organization too, right? So what's the entrepreneurial play there for someone who wants to build inside like your model?
Yeah, I mean, I think it's the ultimate model where you can still keep your job, okay? But most people are unfulfilled at their jobs, whether they're not making enough money, they don't feel like there's enough purpose, they're just tired of being managed, right? I've always had a problem with authority. Maybe you two had that.
I'm so unemployable, bro. I cannot be employed. Been there, done that.
Sure. So many people feel that deep down inside, but they also understand that entrepreneurship is a big risk. Having to put up the money, the time, walk away from what's comfortable. Well, what if there was a nice little bridge that kind of allowed you to slowly transition over to the world of entrepreneurship? I think insurance is a great avenue for that. You can do this business very part-time, okay? Like one of my agents, she's extremely part-time. She's a full-time elementary school teacher, okay? And she's got a bunch of kids of her own. So this girl, Anna, she's around kids like all day. you're a dad, you know how busy your own kids. Imagine
Yep.
having to deal with them all day, you know, and obviously teachers don't make the money that we should pay them. So on the side, she works with us very, very passively. Okay. Like clockwork, every 6 months, she'll send us a deal. Okay. Now, what's cool about our industry is we don't need you to be the expert on this stuff. All you have to do is broker that connection. We'll take care of it and we'll split the money with you. We partner up. So Anna has sent us a couple whale deals over the last year.
Wow.
Where I think just between these two deals, she's probably made about $40,000. Okay. For 2 deals. For making a couple introductions. That's cool. In my opinion.
That's very cool.
That's very cool.
Yeah.
So you can start building this business part-time and then you can scale it part-time. Because I'm sure everyone knows some other people who want an extra opportunity as well to make some extra money. Well, you can start developing your own agency. And as your agents produce, you override that income and you can start earning passive income. The scalability of an insurance operation to me is unlike anything I've ever seen. Okay. I have 400 agents all over the country. The top agents in the company are underneath me, right? And we don't even talk. They're in Missouri.
And you get concessions on all of their deals.
All of them.
Amazing.
All of them.
Yeah.
So, Diego, and I say this very humbly, but if I fell into a coma for the next year, I'd still make a 6-figure income.
Amazing.
And I started part-time. And anybody can do that. And it doesn't matter what your limits are. Like, give me an excuse. I don't have time. I don't know anybody. I hate insurance. Whatever your excuse is.
Yeah.
Introduce me to 3 people who don't have that excuse. I'll work with those 3 people and build an army, and you'll override an army of. You don't have time? Great. Give me 3 people who have more time than you. I'll work with them, and you'll get paid for the time you don't have.
Yeah.
Maybe that'll free up your time. I hate insurance. Great. Introduce me to 3 people who love insurance. You'll get paid for hating insurance. Because it's not about you. Just like when I brokered that solar deal, I wasn't doing solar, but it wasn't about me. If I want to do some commercial real estate with Diego, I don't have to know the ins and outs of commercial real estate. I just have to find someone who's into commercial real estate and broker a deal.
Yeah.
That's the art of business.
That's the art of business, connecting the dots. So last real question before our rapid fire round, because at the end of every show, we do a rapid fire round where we're just firing off questions real quick at you. And something that I think about quite a bit, honestly.
Sure.
What's one thing you know now that you wish every 25-year-old entrepreneur knew about money and protection when starting?
It's easy, man. Just the value of compound interest.
Yeah.
That's it.
That's a good one, man.
That's it. And also to always maintain the bigger long-term perspective. I think people get so caught up in the day-to-day and, putting one foot in front of the other and the short-term gratification, which I understand the practicality of that, but at least 5 to 10% of your focus should be focused on like the long term.
Yeah.
Right. I'm a chess player and there's different kinds of chess. You got blitz chess where you're just moving pieces. But what is the chess that is the most respected? It's the classical chess. It's the sitting there and staring at the board for hours and calculating 20 moves ahead. Okay, I think everyone is playing blitz chess, but you need to play a little bit of classical chess too.
Yeah. Well, you just need to play chess in life because people are playing checkers, bro.
Yeah.
Like have some strategy in your world and in your life.
For sure.
100%. So this has been really, really insightful, Eugene. I want to thank you for coming on the show.
This is great,
I want to hit you with some rapid fire questions. You ready?
Run it.
Cool. I think I know your answer on this one, but the first question is term life or whole life? One word.
IULs.
Cool, man. Biggest financial lie sold to the middle class?
Ooh, 401k.
Yeah. Don't tell the boomers that though.
Yeah. Okay, man.
Dave Ramsey, is he right or wrong?
He's right-ish, but also wrong. He's got some good stuff, but I can't give you like a just listen to what he says with some discretion. Like, he badmouths whole life, but owns whole life. So
yeah.
I don't know.
He's also a master marketer. So
yeah. You're not going to get rich listening to Dave Ramsey, but you're also not going to be poor. You're going to be like,
it's true.
You're going to be
middle-ish. Yeah. One money habit that has changed your life?
Spend less than I make.
Ah, what a concept.
Who would have thought, man? Cash flow positive. But here's another answer to passive income. Look for ways to generate passive income.
Yeah, something that we didn't fully go into on this show, but or this episode, but active income, generating income, whether it's your W-2 or your business, and then income that's more passive.
Yeah.
Because really no such thing as passive income if you really think about it, at least in my opinion, because there is effort that needs to go into these income streams that are, less active. But having, and this is something that I always talk to and advise my clients is make your money, make that active income, take the cream off the top, roll it into assets that are going to drip, and just continue to do that, and continue to do that, and do that for like 30 years. By the time you retire, your active income is really like could be a hobby. And I have a feeling you're never going to retire, and I'm never going to retire just because.
Oh no, it's too much fun, man.
I just love being in the game.
You got to talk to guys like Diego.
Oh my God,
this sucks.
Yeah. If your house was burning down and you could grab one financial document, what is it?
One financial document? I don't know, man. Everything's digital these days.
It's true.
So my laptop,
hard drive.
Yeah.
Something that we've kind of dabbled a little bit on the show over the last year, crypto.
Yeah.
Wealth builder or wealth illusion?
Look, man, I'm not the crypto expert here. I dollar cost average into Bitcoin, and that's about as deep as I get.
Yeah.
Okay. Because I figured it's made enough noise at this point where, it's probably something, but that's about as deep as my advice is going to go on crypto, because I'm not.
Yeah.
I don't.
And this isn't, financial advice or legal advice, but, for me, crypto is just another quiver.
Yeah.
Or another arrow in the quiver. But I probably wouldn't want to start off with crypto. Start off
kind
with
of the
business,
Wild West. Yeah.
Get some policies, build some assets, build a foundation, build a base, and then go and gamble.
Yeah.
Or play the the casino a little bit.
It's earned a spot on my overall strategy, but it's kind of like the unknown section.
Totally.
Right?
It's 10%, maybe that. Number one thing that kills a family's financial plan.
Not having one. Inactivity.
Yeah.
And that'll kill you in anything in life. Inactivity.
Yeah. What do most people spend too much money on that they'd never really want to admit?
Gambling. Gambling. It's a huge problem, bro. Huge problem.
Yeah. Now with all these apps and it's you can.
Yeah. Lottery tickets, gambling. Lottery tickets are just a tax on the poor, bro. That's all it is. I mean, then you got your DoorDashes and Amazons, and this is what I thought growing up. I thought the way you got rich was hitting the lottery.
Yeah.
That lottery mindset doesn't serve you well in anything, man.
Yeah.
Yeah.
What's one thing the wealthy do with insurance that the middle class doesn't even know is possible?
Leverage the cash value.
Yeah.
Leverage the cash value.
Pull the money out of the policy.
Yeah. And then use it as a way to pass the money down generationally tax-free, but also avoid a lot of the headaches, bro. Life insurance is simply, look, if I die and you can get my money by sending in a freaking claim. And there's no probate. There's none of that.
Yeah.
There's no, it's just, that's it.
Yeah.
Yeah. So it's just a clean way to pass money generationally tax-free. Like the Rockefellers did that. They had everyone in the family. It was called the Rockefeller waterfall method.
Mm-hmm.
Everyone in the family had cash value life insurance. That cash value went into the family trust. And then whenever anyone needed financing from for whatever, they would take it from the family trust tax-free. And then it would just replenish when they died.
Yep.
With their insurance. And that just kept it going down the generations.
Yeah. That's a really great method and a really good book, The Rockefeller. What would the Rockefellers do? Really good book. If Bisto Biz disappeared tomorrow, what would the world lose?
I as much as I think we're doing something cool, the people would still be here. So we would just start up again, bro. Sometimes in life, you fall down, you get back up. It couldn't, I am not invincible, okay? Anything can go wrong at any time, okay? But I think it would lose a pretty cool story that we're telling, right?
Well, I mean, you guys are helping small businesses and the middle class. The folks that they're the grinders in the economy.
Our industry is doing that. So there's other homes in the industry, right? This is the team that we're building and playing for now. But hey, if Bisto Biz fell apart, there's other teams. We'd still be doing the same work.
Yeah.
But we wouldn't have the same cool acquisition play that no one else has in the industry.
Okay,
no one else has that.
So. Dude, amazing show. Thank you so much. How do people find you, and how do people connect with you and learn from you and work with you, man?
Yeah, absolutely. So Instagram is always my favorite. You can find me, Eugene Tomanpos. If you just search my name, Eugene Tomanpos, I'm the only Eugene Tomanpos on the planet. So you'll easily find me. But my handle is _Eugenius, _EUGENIUS. I'm even cool with throwing my phone number out there, but I don't know how you feel about that.
Yeah, whatever, dude. Like
650-281-1772. Text me. But slide up in my DMs. DMs are great. It's what I use to grab my fiance, man. I slid up in her DMs and now we're engaged.
Awesome, man. Good for you.
Yeah.
Good for you. You guys, another episode of the Wealth and Wellness Report. Thanks for tuning in. Be sure to hit that subscribe button. We'll see you guys on the next show.
Peace.
Peace.